right, so yes, we're having another episode of Energizing Bitcoin, and unfortunately, Jake is not going to co-host with me today. So
I'm literally sitting
I know he's sitting right here, but at least he's in the room, but he's not helping out here. So it hurts because I've liked our chemistry. But you two are here, so it'll be good. Jeff Burkey of Foundry, business development, VP business development.
Yeah,
We're good. That's yes. And then we got Aaron Foster, VP of business development at Luxor.
Yep.
So they're not going to fight. They're going to be good this whole time, and they're going to put the gloves away. But I really just wanted to have you guys on here because honestly, Jeff was one of the first people. We used your pool. No offense, when I was at Jay. No offense, Aaron. You weren't there yet, so yeah. So blame it on Ethan and them. But yeah, Jeff, we used their pool when I was at Jay, and got to know you pretty good, and we've got to do a little bit of stuff together and get to know each other over the past, I guess, couple of years now. But glad to have you here, man, and get to talk about, I don't know, some stupid shit and have a good time and get to know your backstory. And Aaron, I've got to know you a little bit over the past few months, so glad to see Luxor picked you up. But yeah, we're just going to kind of talk about your guys' backgrounds and pools and get people to understand a little bit about them and what they do and how you guys work with miners and all that, because it is a big part of it, right? So Jeff, though, why don't we start with you? Like, give us your background and kind of how you got into the space, because I know you came from more of a traditional background, and now you're in the world of Bitcoin.
Yeah, so which is kind of like everyone, you kind of somehow find yourself in this crazy space. So I was working at, I started at Morgan Stanley and was sort of a traditional stockbroker. I worked in, the private wealth group and had a long career doing that. And I was, I think, and on the way over here, actually, I was telling you the story about how I
already know what I'm going to ask you next too, but go ahead. Yeah.
I like buying and selling domain names, and so I remember like seeing, I would track all these sales, and like at some point, I think it was like 2014, bitcoinwallet.com had sold for like 250 grand.
Dang, 2015 it is?
Yeah, like 2004. I'm pretty sure 2014
Really?
it was like $250,000.
Dang.
And I'm like, all right, it's like a big sale. Like Bitcoin, I'd kind of heard a little bit about it, but I was like, there's something going on here. Like, this is like a real deal, right? And so I started digging in then. I was, early Coinbase account. I had, that was when they only had 3 coins, right? Bitcoin, Litecoin, and ETH. And I just, put some money in and started kind of, buying it and trading it. And that was really the beginning, right? Of just kind of like getting into it. And so I was working at a long only investment shop at the time. And my manager at the time knew this local businessman, Mike Collier, the CEO of Foundry, and he said,
super cool dude too, right?
The best.
Yeah.
And
you're not saying that either because he'll probably see this, but you're saying that genuinely. I've heard you actually say that when nobody was recording anything.
This is true. So yeah, Mike, you're the best.
Mike, he says it all the time.
All the time. And so he's like, you got to sit down with Mike, and he's doing this. He's doing Bitcoin mining, and I had a couple coffees with Mike, and he kind of explained what Foundry was up to and what they were trying to build, and I was just like, I got to do that. Like, this sounds amazing. And so I kind of jumped in with both feet and kind of, and a lot. It's funny because like I didn't know what an ASIC was. I didn't understand that people were mining in the pools. Like I just knew that you could fund the Coinbase account and buy some Bitcoin,
right,
and so I was just trading it. I didn't know anything about where it came from, right?
What did
I didn't
your
understand
wife
the technology
think of that? Because I know how mine went. What did yours say when you're like, you know what? I've really enjoyed my Wall Street career, and very, very probably prestigious and hard to get job. I'm gonna bounce and I'm gonna freaking do crypto, and I don't know anything about it.
I think that she was actually hugely supportive. I think like any big change, I think it was kind of like there's a little apprehension to that, right? But I think she trusted me and was kind of like, yeah, if it's like what you want to do. And I think I'd always followed like the startup scene really close, and this was just like a really entrepreneurial opportunity. And she was just like, yeah, you got to go do that. So I think she was.
That's a good woman, man.
Yeah, she was good.
Job. Well done, Mrs. Burkey. That's cool. Aaron, what about you, man? How did yours get going?
Oh man, it's hard to reminisce. 2017. I had a friend actually, and he'd been into it for quite a while. And his business at the time was gambling website. He enjoys the gambling websites and was very kind of into how casinos work. And he had a website, and part of it was accepting Bitcoin. I was like, what are you working on these days? And he's like, oh, I'm looking at this thing called ETH and looking at putting some money in that. And I was like, well, tell me more about this Bitcoin. This is like 2017. I'd obviously heard about it before that, but as far as like, investing or buying any, I was like, okay, well, he had been successful. He's an entrepreneur, living the high life these days. But I was like, okay, well, how do I buy something? He's like, well, here, send me some money and I'll send you something. It was, don't send me Bitcoin, I'll send you 2 back. I wasn't any of that kind of thing. But anyway, so I sent him a bunch of money. He sent me some Bitcoin to set up a Kraken account or something. They sent it to that. And that was kind of my initial start. And they got I feel like everybody's goes through this phase. You do the mining thing, right?
Yeah, dude. I was gonna say, because most people start. I feel like anyway, most people start getting into the space in mining, right? If they don't know a lot about Bitcoin, it's like, oh, I'm gonna go start mining, because it's kind of all the things about Bitcoin, I feel like it's the easiest concept. You plug a computer in, you make Bitcoin. And I know a lot of people, it still seems weird to them, but that's like what most people do. But you guys are obviously in the pool side. But go ahead, my bad, I'll jump in.
No, yeah. So after I got the Bitcoin, kind of didn't know what to do with it or whatever. It was just like, more of an investment. Didn't really understand anything about like what the value prop of Bitcoin was and all that. Just kind of sat in my Kraken account. Just pal, appreciate you. Obviously took it off the exchange and kind of learned a little bit more about the hardware. But at the same time, I was like more curious about this ETH thing, because coming from oil and gas.
You did come from oil and gas?
I did come from oil and gas.
What did you do in oil and gas?
I worked out in, so I'm Canadian.
How do you leave that out, bro?
I'm sorry. I kind of jumped a bit.
Yeah, you did. You skipped the whole.
So
we're all oil and gas
people. I got like right
here.
into it, didn't I?
Yeah,
I apologize. So let me take a step back. So prior to getting into Bitcoin in 2017, I worked in oil and gas out in Canada's oil field, version of Texas, for a large oil producer out there. Life kind of took over. Moved back to Ontario.
What were you doing in oil and gas? What discipline?
I was right in oil sands up in.
Were you engineer? What were you?
Management, supervising a crew.
Oh, okay, yeah.
Right up in Canada's oil sands. Anyways, moved back to Ontario to kind of start a family, and life kind of took over. But so to kind of jump back ahead, after getting out of oil and gas, the mining thing really resonated with me because I understood it, right?
Yeah.
Do this, you get that. There's a capex cost, there's an opex cost, and here's what your revenue is. So started playing around that in the basement and started getting more involved. This was like 2017, 2018. Remember ICO craze and all that stuff.
Yeah.
Got burned by a few ICOs, just trying to understand it, whatever. And sold all the gear in 2018. That was probably one of the smarter moves I made at the time. It wasn't a ton.
Good timing.
Yeah, just this is had the smarts there, and then but from that point on in 2018, really just continued to just be involved, like not involved, but to pay attention to the market, because it was fascinating, right? Kind of go from ICO boom bust. Because it was very similar, and for yourself, I guess, in oil and gas, it was like those boom bust cycles. So having kind of lived that in my prior life through oil and gas, it was just like, well, I think it's still something to pay attention to. So back in my fiat job prior to joining Luxor was, I was just consuming podcasts, watching Bill McCormick come up, watching Marty Bent on TFTC as he fired up with Odell, and like just really kind of paying attention to it. Fast forward to 2021 when I joined Luxor, I felt like I had kind of just evolved in the space and decided, hey, let's make the leap. Talk to wife. She thought I was crazy.
Well, I was going to say, was she super cool with it?
She was cool with it. I mean, I've done some crazy stuff in my life. So she's just like, if you feel it's the right thing to do, let's do it. And it's probably one of the best decisions I ever made, because, here we are talking Bitcoin full time. And
I know, even in a bear market, man. And that's actually, that's a good point. Like, we're able to, obviously, like, I got to know you during a bull market. Yeah, I said bull market. We're in a bear market, obviously, but getting like we're in a very different situation than we were last year,
Mhm.
and I know. I guess I should say we're at the TBC convention and the Texas Blockchain Conference in Austin. That's why we're on the casting couch over here. So that's the reason it looks the way it does. But even though we're in a bear market, it's had a really good turnout, and like it makes me feel like the industry is really kind of matured from like that 2018 time, from where back then I felt like everybody was still talking about like Bitcoin's going to zero and it's going to disappear. It's not a real thing, all this kind of stuff. I don't even hear that talk really now.
Yeah,
Despite all the shit we're going through, really.
Yeah, no, and I agree. And I think like we talked about on the way over is this like idea of like oil and gas boom bust cycles. Dude. Like I think a lot of these they're used to this, right? Like here we are in Texas, is like the home of oil and gas, and it's like these guys are used to these cycles, and if you understand them and you study and you sort of like prudently deploy leverage at like the right time, and like you don't get over your skis too late in the cycle, like that's the opportunity, is how much volatility there is. Like the folks building right now and putting fresh capital in the space, like those guys over the next couple of years are going to do great.
Yeah,
you know, and so I just think that, and you get that feeling, like people don't, no one likes the bear market, right? But it's like they know this, like they know that, hey, we just need to survive, and if we can survive, like it's going to get really good again.
The people who survive through this time are going to, I agree completely. They're going to be set come the next bull market, which will come. It will come. I mean, it always has, and I really don't see any reason why it wouldn't. But
and I think from like coming from like a sort of a capital market background too, as I think as there's more sophisticated capital in the space, I think some of these, like the traditional 4-year cycle, things will start to get like pulled forward a little bit. Right. And so you'd think that Bitcoin would moon in like mid 24, right? Give or take, like sort of like right after the halving. That's when you'd expect it to start to ramp. I could see this go around, like the money flows in earlier, thinking like, oh, I know this is coming. Right. Why don't I just start building my Bitcoin position now?
That's a good point.
And so like I just think that like I don't know that it's gonna wait to rally till then. Like I think
I haven't thought of that. Yeah.
And I think that'll happen on the tops too. Like when it rips, it might, like even this last cycle. Right. Of course, you had like the Chinese meltdown and like that. So it was like a little nuance this time, but like it was sort of pulled forward. It was shortened a little bit. Right. And I think some of that is that you had like big money in that was just like, dude, I'm taking profits now. Right. And so
that's a good point.
I think the cycle gets like a little different.
Do you think that leads to like less volatility over time? Right.
I do.
Like, yeah.
I think they'll get like sort of like more compressed, more shallow. Like I mean, this one has not been that shallow, but we'll see.
Brutal, man. But I do want to touch on that more after a minute. But probably should have you guys kind of explain your companies and kind of your role that you fit. This is a Bitcoin mining focused podcast, but so kind of tell like what Foundry does and kind of all your ancillary services and businesses, and Aaron will do Luxor after that.
Yeah, for sure. So I think the early days of Foundry were really like Mike Collier and Barry kind of sitting down and say, hey, look, like we want to do something in this infrastructure space. Yeah. Don't necessarily want to be Bitcoin miners, but we want to do something. We want to help the ecosystem. And so they sort of landed on equipment financing. And so this was a time when nobody was lending money into the space, and they desperately needed capital, and so
which I still think is probably one of the biggest areas that needs to improve. Like cost of capital for miners is brutal, but my bad.
No, and so they sort of set out. They ordered a bunch of machines, both from MicroBT and Bitmain. Those machines sort of landed. I want to say hopefully I can get like these dates and timelines. Everything blurs together, but this would have been like 2020, it was pre-halving, right? So it was like sort of early 2020, I guess. These machines land, and so like they start working the phones, like, hey, we've got these machines. Would you like to take some financing? and again, economics weren't good,
Right.
like rates were high, and everyone was like, eh.
Yeah.
And so I think really what happened is like we started to plug some of these miners in, and that's how Foundry initially got into became a proprietary miner. And I think that sets us apart from like a lot of other financiers is that we're miners too. Like that's what we do.
I guess some deals you need to come look at then.
So
was it pre China ban that you guys started?
Yeah, no, this was like end of 19 going into 2020 into 2020. And so
which is when you kind of think of which is amazing to think like where the ASIC supply chain is now compared to back then. It was super sketchy, right? Like trying to import it. So to take that gamble,
hard to get machines. Like that's just it. Like the machines we had in the country, like at scale, there wasn't really. You needed like a lot of machines. Like those were the ones you were getting. Like there wasn't. And so I think so then Bitcoin starts to rip. Phones start ringing. People decide the rates aren't so bad. And so we start doing some equipment financing deals. And then sort of along that same time is when we launched the Foundry Pool. And the sort of the thought process was around, there was the space was growing up. There was like more institutions in the space. These companies were starting to go public. And they just needed like that counterparty they could trust, a lot of transparency, SOC audit. Like they wanted a different level of service, right? From the pools at that time. And so I think, and this is sort of like a thread through all of Foundry services, is that we've always sort of like, because we're miners, like we ran into these problems. And so we kind of like solved them for ourselves. And then we like sort of turned them into businesses. So it was like, we started our pool. And like at first we were the only ones mining in the pool. And then we kind of like opened it up. And then like that started to grow. And then, I think that's true of like our new logistics business, right? Like we were moving all these ASICs around, and it was like, we need to we need to do this better. And like, we need this to be a smoother process. So we like launched the logistics business. And then like like some of these newer initiatives, like the Foundry Academy is like, we needed.
What is that?
So the Foundry is like, we're training technicians to like sort of repair and fix machines. And again, it's just like, we sort of find these needs and we try to create, I think we want to this ecosystem to grow and be healthy. And so it's like, we just, whether it's moving machines around or having a reliable pool that people can trust, we're just kind of there to make sure people have everything that they need.
Yeah, and that's kind of like what we were talking about too on the way over, is like there's so much opportunity in this space because it's so new. Even though, even you talk a few years, it's like that's really new still. And it gives you a lot of flexibility to really kind of create your job or your business to just really fill these needs that are out there in the market. You guys are doing that too. Luxor's doing a lot of that too. With
I think the theme is just like, you guys built a business around solving problems, right? For as the industry kind of grows, right? We kind of did the same thing. I mean, we're on the pool side, like by we, I'm going to say, Nick and Eddie and Ethan and Guzman. I mean, they started the pool about 4 years ago and started kind of in the altcoin space, but then switched over to Bitcoin, and that's primarily what Luxor is known for, as being a Bitcoin mining pool. But as a result of the mining pool side of things, people started coming to us and saying, well, can you help procure ASICs? So we have that now. We have a whole team dedicated to that, which is growing quite rapidly. And then at the same time, beyond that now it's like hosting. Can you help out with hosting? So we created like a hosting marketplace for folks to kind of browse hosting and stuff like that. And then now with the hash rate derivative side of things, it's just like clients will say, hey, like, because with the more...
We talk about that more too. I'm sorry to jump in, but I want to talk about that some.
I can jump into
like
it.
on one of the panels, right? They started talking a little bit about that. So
I mean, and you could say like, just like I feel like Foundry kind of led the way on ASIC financing because there's a need to finance that capital purchase. Like we're looking at derivatives a similar way, where it's just like you have more sophisticated players coming into the space, saying, hey, like, now that we're mining Bitcoin, we need a way to be able to hedge and minimize their downside risk, or at least kind of offset some of that volatility that, that we're seeing over the past couple of weeks. So hence that product. And the great part about being, you know, a US based company, I mean, we're well positioned to do that. So, you know, we created that product as a result of a need and clients coming to us saying, hey, like, you know, we need this because our bank can't give us financing because there's no way to hedge that, as an example, right, with hash rate derivatives. But to kind of summarize that up, it's just like any business, it's just like you're listening to your client base and saying, you know, listen to where their rub points are. Okay, well, can we build that, and are we positioned to do that? And that's what we've done. I mean, we're primarily a software-based business. We have a small mining fleet. We don't do a ton of it ourselves, but like, you know, we focus primarily on that because that's where we can add the most value, and that's why we've grown to the size that we are.
Both of you guys have freaking grown so fast, man. Like you guys are the biggest pool in the world now at this point, aren't you?
Yeah, so we I want to say sort of late last year maybe is I think when we hit that mark, and it was,
what are you at, like 17-18% of the total hash rate, something like that?
Yeah, I mean, I think it, you know, that feels about right. You know, I think it's been as high as like 20-25%, but I think I think
no kidding.
And it's, I remember like when we were building and like, you know, every month the hash rate's growing, and it was like, hey, if we could just be like a top 5 mining pool, that would be amazing, right? And so I think we used to like surprise ourselves, and I think we were just kind of like wow, like I think
I bet.
And look, I think a lot of that too was like most things, a lot of it's like boils down to timing, and some of that is like you can try to make educated bets on like, hey, this is like the right time to do these things, but a lot of stars aligned, right? Like this hash rate out of China into the US, and like the more public companies that needed certain requirements, like a lot of things just like lined up, and we just happened to like be ready for it.
Timing, man.
Yeah, it's
getting lucky is really freaking important.
Yes,
so there's nothing
like,
wrong with that.
Yeah, like I think we were gonna build a great pool and become you know, one of the top pools. Like that was gonna happen almost like kind of like regardless of what happened, but for it to be number one, like I think that was just like wow, like a lot of things like really went
but
right.
it goes for both groups. Like it goes back to, because when we got Jay going, like Slush Pool at Luxor, you guys were just getting going really, and it was like, man, there was no chance we were going to go with like a foreign group. We wanted North American like based groups handling that as much as possible for what we did. And that was something that like I was factoring in quite a bit. But I mean, you guys have both really exploded. I don't know what your guys' market share is right now of the pool, but
6%.
Yeah, but it's still a lot. Like when you think about around the world, like that's still a healthy chunk, man.
Yeah, I mean, we benefited as well. I mean, we're bootstrapped. We don't have the deep equity pockets like Mr. Silbert and everybody has, right? So we started off, you know, Nick and the guys, you know, just literally bootstrapped and just did a small Series A, I believe, not too long ago. But you know, we've just grown organically and been a benefit of hash rate and mining becoming prominent within North America. So it's been great. I mean, just like watching Foundry or any of the pools grow, like it's been fantastic. Like we've basically tripled in size just in the past year alone.
Jeez, dude.
That's with new, you know, organic new hash rate, new players coming in, as well as existing clients that, you know, started small too. So
what would you guys say, like for a group? I mean, I know what I worried about, but what would a new mining group that really is trying to decide on a pool, like what are the pitfalls that they could fall into, or what should they watch out for? What are the risks? Because I get asked this a lot from oil and gas companies when I talk to them. It's like, well, what happens if that pool goes out of business? It's like, well, I'll tell you, switch to a new pool. But like, what are the difficulties that pools face running their everyday business? Because there's got to be, and maybe you should explain how a pool works so that they can understand where you're going to go next. Because I've always worried about like, what if you didn't win blocks? You know what I mean? So go ahead though.
Yeah, and that's exactly where I was going to go. Is that it's essentially like an insurance product, right? So you're contributing your hash rate, and you're getting paid like a theoretical amount that you should get. And if you were mining your blocks yourself, right, you would sort of have all these input costs, all this electricity costs, and you would just wait and like hope you hit a block. That's a tough business to plan for, right? So the pool, and that most folks are mining in a pool these days, is like they get this steady cash flow, right? Like you pay out every single day, you kind of know what you're going to get. And so all that risk is on the pool provider. Like, we're going to pay you your guaranteed daily hash rate, right? And that you're going to get that whether we mine the blocks or not. So that luck variance is can be like, you need a balance sheet to be able to do that, because it can.
Like when the dudes won, a couple guys won blocks, solo guys won blocks. What was it, last year? Or was it earlier this year?
Yeah, it was a couple of them. There was like,
it was like
I thought there was like 2 or 3 in a row.
There was a streak.
It was,
I was like, wow. That, I mean, how much does that impact like the overall pools on a daily basis? You only have 900 Bitcoin a day right now, right? So if a few blocks go to solo guys, like what does that do to your pool or the overall pool market for the day?
Nothing really. When you think like, it's just luck variance. So that's all it really comes down to. And
it pretty much plays out across the board. Like
so over time, like the larger you get, and like over time, like that should like net out to zero. But but that doesn't help you in that given week when like your payouts exceed your blocks, right? So like, that's great that it in theory works out over time, but you do need to be like well capitalized to survive that week, right? And so it's and I guess the other thing, like you had mentioned this idea of like, what's the biggest thing that the risk, or like what you're looking for. And I think what it is you want to make sure that you're getting paid absolutely as much as you should based on your contributed hash rate. And I think some of the legacy pools that like you never quite knew if you were getting as much Bitcoin as you were putting in. It was like just a little unclear, and it was like, it's kind of like a black box. You didn't really know.
We promise.
Yeah, you're like, no, this is the amount you're gonna, you should get. It's like, you never really like, oh no, you're not paying a fee, and it's just like, but it doesn't.
It's something adding up, man.
And so I think that there was a lot of that, and so this is like,
there's a trust factor there, right? So I mean,
right.
with the FPPS pool, it's very similar. Like the formulas can be audited. I don't know if Foundry publishes it. I'm sure you guys do. But
they're super detailed.
Right. So it's like you can give that to any sort of auditor or whoever, to run the numbers back and say, okay, this makes sense. And we've been approached by auditors and said, it matches like the information. So that's the important part, because you're submitting data to a platform, and you're trusting that platform is outputting the correct amount at the end of the day. So there needs to be a way to audit that, and through the FPPS formula, you can do that. I mean, there's a bit of nuance between how different pools might do some of the transaction block calculation, but at the end of the day, you mentioned it earlier, it's just over whatever duration, the long enough duration, it'll all equal out to the same. So.
And as far as the amount that people get paid per terahash, because that is how people get paid, and we probably should explain it. You pay them, the pool pays them a certain cash equivalent of Bitcoin for every terahash contributed, right?
Hash price.
Based on a hash price, right? That is the hash price, right? So is that a very uniform number? How much does that vary pool to pool?
So I mean, again, this is like FPPS payout structure. In theory, that's
should be
but even within FPPS payout, like there's sort of like
the fees and
there's the people, like there's a difference, like what should like orphan blocks, and there's
stale blocks,
and so there's kind of like how should that be factored in or calculated, and so there's varying like sort of opinions, or so there can't even be like across FPPS, there can be like small variances of like, well, this is how we, it's calculated this way. And so you can see some differences. And then there's also just other structures completely where some of the like transaction fee variance might be you might have some
it all comes down to the duration you're looking at. Like you could look at Foundry versus Luxor over a short time period, and you might come to the conclusion, Foundry's for some reason paying more. But I mean, I think we all monitor it and look at it just to make sure we're all in the same ballpark. But I mean, there's nothing much to change there. I think, like I know Luxor, like we do a 144 block look back period when it comes to calculating the transaction fees as part of the block reward, right? Whereas I believe Foundry and a lot of the other FPPS pools look at the previous UTC 24-hour day. So, but it's not to say that Foundry or Luxor would pay more. I mean, it really comes down to that duration and then the probabilistic nature of luck of finding a block. So I think in our team, when we do look at that and monitor that to make sure things are okay between all the FPPS pools. I mean, when you look at, call it over a year time frame, it's generally within 1% plus or minus.
Yeah.
So at the end of the day, I mean, unless you're a large miner, that might make a bit of a difference. But what I kind of tell folks in generally, like when you're comparing, because that's probably one of the biggest questions we get, is what pool pays more, and I think that might be a kind of a legacy type question from pleb miners. But the sad part about it is no pool, FPPS pool using the same FPPS formula pays more. Right. It just comes down to the luck factor of it. So I mean, I hate to break it to you, but like, and I think whether it's Lux or being US based and or Foundry, like there's not much of an edge there. I think it's really comes down to a service type decision matrix. So that's where you see pools offering different services, I feel like, because there's no edge necessarily that we can gain by on the pool side. Says, okay, well, what other products can we offer? So that's where you see, whether it's Foundry or Lux are offering different product types for their clients to build that trust and whatever. So, it's I can't speak for some of the other pools out there, overseas and how their stuff works, but
we don't care about them.
No
issue using them.
And it's
they might get mad. I don't care.
It's part of the reason why some of the public companies, for example, go through this rigorous process of vetting their revenue provider, which essentially that's what pools do.
Yeah.
So we have to be we have to be compliant, because we know that these people are going to spend the big dollars on the lawyers to come after us or
but they spend less on us because we're cheaper. Yeah.
And truthfully, and what it rolls up to, there's no incentive for a Foundry or a Luxor to cheat or like we're a US based company.
Right.
So our incentive is to provide the most accurate service to our clients, and then there's other ways that we can and we make money through whether it's mining pool fees or lending fees and all that stuff.
So you guys were talking about like liquidity on the pools, and probably like either one of you feel comfortable trying to explain the difference in a pool and an exchange, because they're obviously, I know they're very different, but there are. I mean, nobody's watching the show yet, but like there are probably going to be a lot of people, mainly oil and gas folks, that do not know the difference. And I think obviously with all the garbage going on with our boy Sam and what he's done to the entire industry, there's going to be a lot of questions about it, right? And people understand what the difference is. And so the liquidity obviously was an issue for that. And that's an exchange. It's not a pool. But liquidity issues and being able to make sure you're paying miners in the event you go on a losing streak with a pool, like, is there a certain kind of reserves you want to have as far as cash compared to the size of the pool? And is it real linear, or does it scale up with the scale of the pool?
I mean,
is that too?
No. So for Bitcoin, Bitcoin, like the larger your payouts are in Bitcoin, like you need more Bitcoin reserves.
Yeah.
There's no doubt.
Is there a certain percentage you guys try to stay at or hit?
There's a thoughtful analysis behind that. I feel like there's the cushion is ample enough. But I think the other thing to keep in mind is that like we're paying out every single day.
Yeah.
So we're not a custodian. Like
I don't think people
Foundry
understand
and the Foundry pool is not a custodian.
Right.
Like you can't mine into the pool for like a week and like we're hanging onto your Bitcoin for a week. That doesn't happen.
Dude,
this Bitcoin is going out every day.
And I talk to oil and gas companies about that because like obviously you're mining off natural gas. When you mine off natural gas or when you sell natural gas, you usually don't get paid for like 60 days to 90 days at least. And so you got this kind of delay on when you sell to when you receive your funds for that. Mining with Bitcoin is very different in that you get paid every single day. Like, I think ours were showing up at like 1 a.m, 2 a.m, something like that. But every single day you get paid. And so, the liquidity stuff, like you guys are not sitting there just trying to hoard the Bitcoin that they got to use it to fund other projects or anything like that. It's like we're paying these funds on a daily basis.
Yeah, like to the cushion comment, because we're paying, like there's a cash flow there. So, but at the same time, we still have to based on hash rate joining the pool, you still need to forecast what your outflows are going to be. So, you need to have some sort of cushion in case you go through a period of bad luck, right? Like, maybe not in Foundry's case necessarily where you become big enough, but for smaller pools, that don't have a lot of hash rate, those swings could be big. So if your cash flow depends on that, so you have to be somewhat thoughtful of it. But I mean, with the team that's operated a pool for any sort of length of time, I mean, using statistical probability, you can kind of figure out theoretically where you are kind of in that luck kind of phase. And I'm guessing, well, I know for a fact everybody monitors. We have to, like, it's one of those kind of statistics, right? Just like monitoring your bank account at the end of the day. Am I gonna have enough to pay all my bills? And you have to. So but that is one of the I guess the risks of a mining pool. But where that risk to any sort of miner is mitigated is the fact that you're not getting there is no 30, 60, 90-day payout. You're getting paid every 24 hours on the hour.
And you're getting paid you guys are paying based on something you actually get, which is the hash rate, right? You're getting that terahash contributed to you, and that is what the Bitcoin code pays that automatically. And I think that's a big difference. And I know that sounds simple to you guys that we got to talk about an exchange and a pool, but that is a huge difference, right? That exchanges get people giving them money or cash in exchange for something. They don't, even if they leave it on an exchange, they are not actually getting that thing. It is something that is held by that exchange. And so,
yeah, I mean, you could make the analogy like we are buying hash rate, so people are pausing their hash rate to the pool, the database, and therefore we give them Bitcoin at it, because that's essentially what you're doing. You're selling the hash rate to the pool at a slight discount to the actual market value, which is hash price. So, and that slight discount is what your mining pool fee is, or whatever that is. So, I mean, we kind of, internally we joke we're like a refinery of some sort. We're taking the hash rate, refining it into Bitcoin. You know what I mean?
That's a good analogy.
It's kind of how you do it, right? Like just trying to, make the connection there. But we're hash rate refiners. The input is hash rate, the output is Bitcoin, and whatever you do with that Bitcoin at the end of the day, sell it for fiat and buy more ASICs or whatever. So.
I'm super curious what the energy, oil and gas guys, like when they kind of like are coming to this market for the first time, like what questions are they asking, right? Like what are they
the ones that I'm asking you right now, they're like, so what's a pool? And how does it work? Well, how do they have that money to pay? Like, it's literally some of these questions, like how liquid are they, and how do we ensure that we're going to give terahash and we actually get something back? And that's a lot of it is just due to not understanding at all how it works, and that this code automatically works. Like, when you contribute the terahash, the Bitcoin to you guys, like, and you win a block, you're going to get that Bitcoin. You guys are taking the risk of dispersing this Bitcoin to you every day, but you are actually getting something. You're getting the hash rate. And that's where I think, like, eventually there's going to be like a real hash rate market. I know you guys are working on some of that. Can you talk about some of that, the hash rate?
The derivatives?
Yeah.
I mean, we obviously just launched that a month ago. Sorry, it's all blur these days. But launched a beta product to basically, which is, at the end of the day, it's a non-deliverable forward contract. So it's cash settled. So you don't necessarily need hash rate, which is a misconception, because there's a few products before where you actually had to contribute hash rate to it. But basically what it is, just to, because we talked about hash price earlier, the dollar, the USD value of a terahash per day, we're switching to petahash now.
I saw that today.
10 S19s is one petahash, but it's just because you're getting the value of your hash rate is determined by hash price. You need a way, or any sort of sophisticated miner needs a way to be able to hedge that underlying commodity, which is hash rate, or hash price, or hash rate, I should say. So we developed this product, fully regulated, using the NDF format, so non-deliverable forward, cash settled, where you can essentially take a bet on whether hash price is going to go up or down, hedge that. So just like what we saw over the past week, had you have connected with our team and hedge hash price of what you would get for your hash rate at I think at that time it was around 7 cents per terahash. Now it's sub 6. Or hovering around 6. I mean, you would have been okay in this volatile time and whatnot. So hedge that risk.
So that's a big deal.
And who are the buyers of that?
That's that was gonna be next.
Interesting
Good
question.
job,
So
man. Yeah, that's what I want to know.
Matt and the team, like we didn't know internally like who would be connecting with us to interact with this.
Yeah.
And it's miners for one, because they're
Yeah.
curious and they want to learn more. So it's definitely miners.
Mm-hmm.
But it's also speculators too that just want to take a positional side. So okay, well, we just hit was it 5.5, which was like the lowest hash price in the past, I think, 2 years. So they want to take a directional bet to say like this is the low. We hit the bottom. So it's still, I mean, we're only a month and a bit in, so we're still kind of feeling out who's going to interact with it, and then, once we get some more volume there. But it's going to be interesting to see how that market matures. But we're already seeing like requests for instead of OTC, is there other products that you can, and there's some things we're working on there, but to make it a little more sophisticated for traditional folks that are used to going to certain things, certain products.
But that's a big deal, because whenever I was trying to raise money from like private equity groups, especially ones that were like oil and gas kind of focused, they always wanted to know like, what can we hedge it? Can we, can we lock in some profits? How far in advance can you guys go?
So right now, we limit the amount of how many petahash you can actually hedge.
Yeah.
Because there is risk to us being,
you guys are
counterparty there.
You're betting.
Sorry, not counterparty.
You're almost doing the same thing with the pool, right? You're taking the gamble that you're going to win.
Yep.
More than you're going to lose.
Yeah, and there's math behind that to kind of figure out. But yeah, with this, I mean, there's exposure on our side, so we need to manage that risk. So we require a margin up front. So right now it's just 30 days, but over time we're going to extend that to what traditional stuff is, 90 days a year. But as of right now, as clients and folks learn about the product, we'll kind of feel it out and just build on it. So it's very, very beta right now.
But it's a good step in my opinion, because it's like that is the step towards getting more traditional finance groups involved when they know they can lock in certain profits and like,
well, again,
they'll give up upside to avoid like catastrophic downside.
I mean, you're a trader, right? Stock trader, like, or you talk to any oil and gas guy, PE guy, like, what do you mean you can't hedge?
I know.
Like, this doesn't make any sense. But
how do we invest if we can't hedge?
So, and you're talking big dollars coming into this space, like just insane amounts of money, because they understand it, but at the same time, they're just mind blown that they can't go to the CME and
just lock it in.
Take a bet, right? So that has a long way to go. And when everybody says, "Oh, we're so early," when you look at that as far as traditional finance coming in, like we're early.
We're very early
from a mining perspective.
Yeah, right.
So that's kind of what we're going after, and we're excited to build out. It's been a lot of work. We're doing it in a compliant way. Again, we're a U.S. based company, so we need to go through the proper steps to bring that to market. So there's going to be a learning curve, and obviously bear market. So
man,
it's going to take some time, but at the same time, this is when you build those things, because hopefully it'll be a good product market fit come Bitcoin at 100K.
Right. And you guys have you seen much change in sales on ASICs?
Yeah, I mean, we're definitely seeing. I think I on the panel earlier, this idea of there's all these sort of distressed funds being created. So it's clearly there's capital that is on the sideline and ready to come in, but it feels like they're ready to come in. Like they in their minds, it's still a little too early.
Right.
So I couldn't agree more, man. So I think that we're seeing flow. Like people are definitely buying machines. They're buying machines way cheaper than they were. Like a $10,000 machine a year ago is now $1,500. So like they're low, right? They're way, you don't have to deploy nearly as much capital to get a lot of machines online. But I think that the large scale buyers still think they can get them for even. So you're not there's not quite this clearing price at scale. But
I think
people are trying to kind of like somebody will buy 500 machines at today's price. But like, are they going to buy 10,000? And if they're buying 10,000, they won.
Right.
They won really, really low price.
You get these crazy low ball offers. And
do you?
There's a gap there.
Yeah.
Like there's no way you're going to.
And the sellers just aren't quite ready. Like they're like, okay, like, and they want to move miners. Like they're like, okay,
but not for that.
So they're okay. They're at that price. Like they're like,
I'll call you in a week. Yeah.
So we're gonna hold out for a little longer. So it's like I think that's some of the value that this brought to the table.
Yeah.
Is that like you're sort of bringing both sides together a little bit. Hopefully you can strike a deal that works for everyone somewhere in the middle.
Yeah, I've noticed too that at least on a lot of the stuff I'm doing right now is like either putting a power package together for miners to basically market to miners, or helping miners find a power package or an power asset. But I have noticed like a lot of the guys that seem to be calling and looking for deals they haven't actually been in the mining space necessarily, but they're big money guys that are like from power backgrounds or trading backgrounds, and they're recognizing the opportunity, and they're waiting, and they're just sitting. Like they feel like there's going to be a little bit more capitulation, which I do too. I mean, I think we all probably do, that there's probably a little bit more pain ahead before we start seeing some things on the rise.
I feel like there's still a dislocation, right?
Yeah.
There's still like that volatility is created. I'm talking about the ASIC market in general, right? Like you have the distressed asset guys looking for $5 terahash machines. You have the sellers of
$5.
You have the sellers saying, oh, okay, I can still probably get maybe low teens and holding on, because they want to maximize that. So there's a big dislocation.
How much do machines cost to make? Like I've never figured that out.
Come on, Jeff. I know you.
Look, I think I certainly don't know for sure, but I mean, I think I don't know, $1,200
really?
like a machine. Like you're probably, I don't know what you're what you guys are seeing, or what research you've seen, but that feels like pretty close. You know what I mean, to what it and look, like during distressed times, like people sell things for less than the cost of production. Right. I mean, like it happens, but there is the replacement value of that. Like if you wanted to recreate it again, like I'm sure we're pretty close to that number.
Yeah, I think we got to be. And what's funny is like I've told some people buying machines now, especially if you get like newer generation ones. Like, I mean, I know not a lot of people run M53s, but like say those come out, and I can get some of those. I mean, by the next bull run, like you probably can make money selling your machines at that point.
Yeah, I feel like there's like a lot of like in the last cycle, right?
Yeah.
There was a lot of folks that bought super cheap S9s, right? Like they were like not really profitable at the time. You could get them super cheap, and they were able to like once Bitcoin started ripping, like those things were profitable, right? People were able to mine Bitcoin with them profitably and then flip them for a lot more than they paid for them. And we're seeing that in the market too, as people are even going down a level from like the S19s and the M30s. They're going down even to like the M20s, S17s, right?
Really?
Like and they're like bidding on those. Now those are like you see like $3 bids or whatever, and like, but those there could be, and the other thing I wanted to go back to is this idea of that money that's on the sideline waiting. There's a lot of fear in the market, right? Yeah. Sellers are probably a little edgy. They're probably like really tempted to take some of those bids, right? Mm-hmm. But like FOMO is going to kick in fast. Big time. If like Bitcoin starts to rip here and economics start to improve, and I just mean rip, like I'm not talking 100,000.
No, like
I'm just saying
35K or something.
Even 25K. Like all of a sudden, some of those guys will pull the trigger fast. Like they're just going to be like, whoa, this like that guy was at wanted 15, I wanted to pay 10, and like.
I'll pay 17.
Now he's asking like, hey, before he gets to 22, I better start getting there. So
like I think there's two things. Like so we saw it from I don't want to say back in the summer where we dropped to 20K. Everybody's like, no, that's the and then we had that little run up in August. I think it was to 24. Yeah, and like I know we did more volume just because the FOMO kicked in. Right.
Yeah. Isn't that funny, man?
It's amazing how much the price moves in Bitcoin. Like the ringing of it impacts the ringing of your, like if Bitcoin tips down lower,
I can feel it.
Everyone's literally just like, okay, so let's talk about those things again. And then if it goes same too, if it goes the other way, people are like, hey, so can I still get those at 15?
No, we're gonna wait for the market, But like the horrible the shouldie thing. Can I swear on this?
Yeah.
You
can now.
Yeah, you can now.
I don't know what kind of podcast we're here. I'm sorry. I shouldn't swear.
I already did it.
Drop the first swear in the podcast.
Yeah, that's all right.
On the secondary market anyways.
You're sitting on a casting couch, man. Come on.
On the secondary market, especially, like it takes so long for those prices to drop slowly as you know, the secondary market kind of works through some of the involutory, whether it's new or used. But when that price goes up, those secondary market sellers just jack it up. Like overnight, you're talking 24 hours. Like, and that's why I'm
same as oil and gas, man. This is another example of this being the same industry as oil and gas.
Yeah.
Just
like
same
it's
thing.
And then boom.
Yeah, any price movement up, it's like, oh man, service providers just explode.
Yeah, it's wild.
Yeah, but we wait for when we get a downturn. It's like, we drop it real slow, and it's the same way.
I'm admitting this on camera, but I paid $85 a terahash for a couple machines.
Yeah.
That are still hashing.
It wasn't 12,000, so that's good.
Yeah. Well, and I thought I was smart waiting to, I think it was February, March last year. And I was like, oh yeah, I'm smart for waiting. It. And here we are now. Right, with
Trust me, man. I think we all need to be much more open about the stupid things we've done. I was in Belize in March of 2020, got drunk, came back, sold way too many Bitcoin because I thought I was going to capture it on the way down to 1,000. I was like, I got this, as I'm drinking more beer, and I screwed it all up.
Yeah.
Passed out while my phone, passed out with the Bitcoin on the exchange. So
just like your HODL plan, DCA, the same thing I feel like with your mining deployment. Like, you do need to DCA into it because it's just as volatile as Bitcoin, because the price of the underlying hardware is directly correlated to Bitcoin. Foundry, I saw, just published an article on that, I believe, right? There's like on the pricing of ASICs at certain points in Bitcoin and where those kind of price gaps are as things go back up. So
I do think both y'all's groups do the best job of like disseminating good information for people to learn. You know what I mean? You guys both of y'all do a really good job of that.
It's educational. Like, I think it's maybe a little bit selfish on both of our parts because like it's stuff that we continually work through with clients, right? Like, I think it's Foundry Insights. We have hash rate index, and we constantly get those questions from clients. Like, okay, well, let's put something out there for the broader community. And it's really, and I think we all kind of do this, but it's really just education. So that's our way of giving back to the community, and I feel like a lot of folks appreciate it because, like, you talk to any sort of traditional, whether it's oil and gas guy coming into this, like, ASIC, what? Like, hash price, what? Like, it doesn't make any sense. So you put that out there and then kind of get them up to speed, and then you have more deeper conversations, when they're ready for it.
Yeah.
Yeah, and it's easy to underestimate. Like it's easy for us to take for granted the things that we know and like kind of how things work. But like,
dude, we're so
like
new.
If you're brand new to this, like it's all pretty confusing. And
this is going to sound like Greek to people, you know what I mean?
Yeah.
But you're right. It's like we do take it for granted because we're in our own little Twitter echo chamber with all the Bitcoin folks, and we got to be able to kind of educate the folks that are just kind of curious and on the sidelines now. But I guess, like, last question, because I know we're all starving and you go eat. What do you think needs to happen to make mining a more stable industry? Because it's not incredibly stable, right? We don't have the protection on hedging that like an oil and gas company has. It is like being in oil and gas without a hedge market at all. And that would be catastrophic for oil and gas companies a lot of the time. So it's not a knock on the business, it's just, or on the industry. It's that there needs to be more ancillary kind of options that come to the industry. But what do you think those are? Like, where do you think the biggest improvement would come to kind of stabilize the mining industry?
Yeah, it's it does feel again like these cycles are going to kind of like narrow and get less extreme. But I don't know, like, even I think about like the oil and gas business, and it's like it's still pretty volatile. Like they have the hedging in place for it, right, to deal with it, but like it didn't over time get less volatile.
No.
And so maybe mining Bitcoin is always a really volatile business. And then it becomes about creating these sort of like products that are in the marketplace that can help people navigate how volatile it is. And so maybe the volatility doesn't go away. Yeah. It's just that the tools get better of how to, and so I think, look, if you if you understand the mining cycle and you sort of are prudent with
Right.
leverage and like you're sort of only using it maybe in times like this, like this would be a
Yeah.
time
This
where
is-
like
right.
if you're coming, like this would be a good time to deploy fresh leverage
Right.
if you had like a clean balance sheet
Yeah.
today and we're just starting. But you would very quickly want to kind of take that off as you sort of go into the next cycle, and then just all these, whether it's Ryan Boyle from Foundry, who spoke earlier today, talked a lot about like derivatives and treasury management that we do around Bitcoin, right?
Yeah.
So, there are already a lot of tools in the marketplace that people can use, and I think if you are sort of I think with some education and with the right advice, I think people can navigate the cycles perhaps better than they have.
Yeah, right. I agree. I think capital deployment, the timing of capital deployment in this is because of the fluctuations, like you mentioned, on the capital, how much is required to get in depending on when you try to get in. It's so drastically different for the same equipment. Like it's way more drastically different than oil and gas. My coiled tubing is not going to go from, I don't know, whatever the price is to,
10 to 100 in 12 months.
times that number. Right.
Yeah.
But it will in the mining industry. And so I agree. I think there's a strategic way to handle it. I do think the hedging, a better hedging option for miners would help kind of weather the storm, and it would drive more institutional dollars into the space. So that's one of the things. What about you? You got any thoughts on that?
Yeah. Again, it's around services, like just build, like listening to your clients and building out what it is that they need. Research, data, educational, that sort of thing. Like we have the ASIC index, right, which is literally just scraping the web for a lot of the information and just showing that on a very simple, because kind of where we potentially are or going as far as the longer term trends go, to allow people to make those decisions, for their business. Like I just feel like Foundry brought in ASIC lending, which was like a first for the marketplace. Needed product. It's in every other sort of industry, but I think you had people just go whole hog into it. Like that's where the smart, I'm going to say smart money came in and say, okay, I have access to all this capital. I'm gonna take a loan out on it, not really understanding that, hey, that ASIC or miner was $10 a terahash 8 months ago, and they went all in on it. Like they deployed all the capital. So when you look at strategy, I feel like there's got to be there has to be some educational or at least data that can be provided by the industry to say, hey, and don't get me wrong, like it's not necessarily our job to educate investors, but it's something that I think as an industry that people could capture as far as putting information out there for some of these larger players to potentially make better decisions. Now, not to say like I'm not privy to the balance sheets of a Riot or any of these large public companies. I'm sure they've done that analysis, but I think as an industry as a whole, judging by all the folks that are potentially giving their ASICs back, I question how deep some of these folks went. And it's, but that's part of the market cycles, and that's kind of the beautiful thing about the free market that is Bitcoin. So I'm very, having been in the space since 2017, ASIC, leverage or lending didn't exist back then. I'm excited to see what new products, arguably good, arguably bad, come out, whatever the next cycle is or post-halving. I mean, whether it's, boring things like insurance. Like, did people have insurance on their rigs a year ago? Probably not.
A lot of them didn't.
It's common things that you and I deal with, when you go to buy a house that just haven't, accrued. So there's tons of opportunity.
Sounded very Canadian there.
Did I?
A house? You got a boat too?
It's like Minnesota.
Yeah, it's like Minnesota. My parents live in Minnesota, so it's okay. I can make fun of it.
But yeah, there's all that side. There's all that. Even the supply chain. Obviously, Foundry said that there's a need to fix things on the supply chain side of things, and drastically so. Like the ASIC market, for maybe not the institutional, the big players, but for the lower level players or the plebs out there, like it's still sketchy to procure ASICs. Like, do I go to this weird Shopify site and hopefully I get my ASIC that I'm So there's a lot of commoditization that needs to go on in this space, and I'm excited for that because, Foundry and Luxor, I mean, we operate on the premise of trust. Like,
Right.
We're not. I mean, yes, we're a business, we need to make money, but we also want to earn your trust so that you'll come back and use this in the future for whatever service we provide. So.
Both of you guys have been, like, both Foundry and Luxor are huge for, like, when I talk to companies, I bring y'all up every single time. Like, I mean, I've called you guys multiple times with other groups I was working on, trying to, get them across the finish line, and just having a counterparty like y'all, it goes a long way. So, because it does remove a lot of that fear and unknown that comes with trying to just procure stuff. But
like, we're not in the business of scamming people like some of those folks out there, but there is those people operating on that premise to make that quick buck, the snake oil.
That's why y'all need to use Foundry or Luxor. Very last question. Does your daughter make fun of you? She's 13. Does she make fun of you for like Bitcoin stuff? Because my daughter always does.
Yes, and I try to poke her as much as I can as it relates to it. I was like, I got more Bitcoin today. And she's always laughing at me like she thinks that's Monopoly money.
Yeah. My daughter, she just thinks I'm like a dorky dude that talks about Bitcoin. So, that's cool. But listen, thanks for having me, guys.
If the future is going to unfold like we all think, right? These 13-year-old kids,
I can't wait.
All they're going to have is Bitcoin, right?
And I'm going to freaking rub their nose in this. I can't wait.
I look forward to that day.
Yes, man. I'm going to gloat so much. I'm going to
What's that meme about, like, the dad sitting in the chair and like the kids are he's like, Dad, what did you do? And I feel like that's gonna be like
that's gonna be us.
Let's hope.
Your daughter or son? Daughter,
both.
Both. But they're still so young, they think you're cool.
They just see me going on a flight and ask me what I'm gonna bring them home for a gift. So I mean, hope
bringing home Bitcoin.
Let's hope in 5-10 years they can look back on this and say, Dad's a fucking legend. Sorry.
They're gonna say it, man. They're gonna say it. Well, awesome. Thank you, guys. Let's go eat. Get out of here.
Let's do it.
Appreciate it.